Hi there, welcome to Kneppy Invest and welcome to another technical update video where I look at charts upon charts upon charts. We have a look at some indices, commodities, have a look at crypto. Bitcoin is just below $100,000. Not a surprise that it's oscillating above and below that level because it's a very important psychological level. I just saw a tweet from someone who said they're selling $100,000 and going to buy back at $31,000. I wish I had that confidence that something would move that significantly down or even up. Anyway, they could be wrong, they could be right, we just don't know. We'll also have a look at bonds and then currency, and then we'll have a look at some individual charts. A bit of a theme when it comes to the chart portion or the stock portion of the video, and that theme, hopefully, I'll discuss that theme when I get to it, not right now, but there is a bit of a theme. Okay, so let's start with indices. First of all, ASX, or the Aussie Indices, XJO looks fairly flat for the week. In fact, let's have a look at the weekly chart, down slightly, down at 0.18%, but that's okay because we had a couple of good weeks and the XJO remains above the top of the trading range. So the more time it remains above the top of the trading range means the more likely this trading range has come to an end. And the XJO has been in a nice uptrend for a while, for a long time. Bit of weakness back in middle of 2022, middle and sort of the end of 2022, but the XJO has been a pretty nice tear for the past 12 months. In fact, it's gone from 6,800 to 8,400. So I don't think there's anyone complaining apart from people who are short the market, apart from those perma bears who think the market is going to drop every single day. Well, maybe not every single day. Well, yeah, they think the market's going to tank. There's a lot of people out there like that. Think the market's going to tank, think the market's overvalued, and they've always been thinking that. And that's probably the wrong mindset to have because on occasion they're going to be right, but overall they're going to be wrong. And I'd rather be right most of the time than be wrong most of the time. Anyway, so the XGO, it's no complaints about the week. It's only down slightly. And if you have a look at the individual days during the week, it was a down day on Friday. So that's the only reason we're down, because of Friday. And more than likely, based off the NASDAQ, which was, no, I was going to say I think we might be up on Monday, but NASDAQ was up 0.92%, but the Dow Jones Industrial was down 0.28%. And that's more likely mean that we will be down because we will follow the Dow Jones more closely than the NASDAQ, unless you're tech, heavily invested in tech. So the all tech might be up. Okay, so nothing wrong with the charts for the XGO. If you have a look at the daily chart, it's in a nice uptrend. It's a beautiful uptrend. So there's no reason to be bullish right now. Maybe the only reason to be bullish is it is above the top of the trading range, so we might see a pullback. But at this point in time, it's remaining above and has remained above the top of the trading range for a couple of weeks. Now on to the XSO, down 0.76% on Friday. And funnily enough, if you do have a look at the XSO, this level where it just dropped out from 3,230 is an important level because that was the highs for the XSO back in October. It tried to get above this level again and it's just pulled back on the Friday session. So that is a resistance level, not a massively strong resistance level, but it is a resistance level. So if we see the XSO get above that level, that would be a strong move. And just like the XGO, XSO is in an uptrend. And I did hear something really interesting about the XSO. So with the XJO, there's the only companies that leave the XJO are those companies that are dropping in value. So the companies that are doing really well will stay in the XJO. In fact, they'll become a bigger and bigger portion of the XJO over time. And this person's just mentioned that the XSO, a lot of times the really good performing companies will exit the XSO and move into the bigger indices. And I've never thought about that. Because the XGO, you do get rewarded for companies who do perform really well, will lead to the XGO going higher. But you don't see that with the XSO. Those companies that do really well actually leave the XSO. So that's really interesting. And those companies who don't perform in the XGO might fall to the XSO. So that's why the XSO tends to struggle more over time. And that's why the XSO, if you have a look at the weekly chart, is still not at its record highs. Anyway, I've never thought about that. It was a really interesting podcast. Anyway, if you do have a look at the weekly chart for the XSO, it is moving into an uptrend. So it actually does look good. I like this sort of chart. A nice oily uptrend developing for the XSO. So good news for those companies within this particular indice. Okay, so looking pretty good in Australia. By the way, XSO was up for the week, even though it was down for Friday, up 0.32% for the week. So a little bit more strength in the XSO versus the XJO. Okay, so let's move our attention to United States. We'll have a look at three indices: NASDAQ, Dow Jones Industrial, and the Russell 2000. And a pretty good day, pretty good week for the NASDAQ. In fact, up, what was it up? Up 3.31% at record highs. So the weekly chart, what is there to say? It's a nice looking chart, record highs, nothing to complain about. In fact, this is the first time for a while that when I look and compare the NASDAQ to the Dow Jones, I might choose the NASDAQ over the Dow Jones because we are at record highs for the NASDAQ. It's looking pretty good. Daily chart looks good. Weekly chart looks good. No complaints at all. But if we turn our attention to the Dow Jones, it didn't really do anything in the last week. In fact, it was down. So there was more life within the NASDAQ than the Dow Jones. So tech than non-tech companies. So it's very interesting when the NASDAQ has a really good week, the Dow Jones has a bad. Would you call this a bad week? Down 0.6%. I'm not sure to call it a bad week, but slightly negative, particularly when you compare it to the NASDAQ. Now, I'm not complaining because most of my holdings are in the NASDAQ, if I remember correctly. Yeah, I'd say probably 60% are in the NASDAQ. And even then, even though I'm sort of poo-pooing the Dow Jones Industrial, if you have a look at the chart, nothing to complain about. So this is the weekly chart, beautiful uptrend. Even the daily chart still looks good, even though it's sort of down slightly over the week, it's still looking pretty good. So no complaints when it comes to United States at all right now. Now that could change. That could change next week. It could change in a month, 6 months, 1 year, 5 years from now. Right now, they're looking good. So I do like to listen to, read and watch perma bears, but that just gives me a different perspective. And even though they're always bearish, doesn't mean they are right. And at this point in time, they have been wrong for a long time. Stephen Van Meter has been releasing bearish videos for years, and the market has just kept on going up. Now, you might say the market is irrational right now, but the market can remain irrational for a long period of time. Just how long? Don't know. So that's why I do like to use technicals, because technicals will tell me when the sentiment is starting to turn negative. At this point in time, there's no signs of that. What about Russell 2000? This is the small cap index in America, and this is another really good looking chart. It's finding a little bit of a resistance at 2,440. In fact, if we have a look at the weekly chart, it looks like the Russell 2000 was down slightly, down 1.06%, and it has bounced down from that resistance level. That was the highs back in November 2021 and the highs we saw last week. So it's a very natural resistance level, long-term natural resistance level. I suspect it's going to break above that level within the next few weeks. If I had to guess and bet, although I'm not a betting person, I would bet that, just because this daily chart looks pretty good. It looks pretty good right now, but doesn't mean it will break. But if I had a bet, I would say it will. Anyway, so yeah, the American indices look pretty good. Australian indices look pretty good. No reason to be bearish just yet. Okay, let's turn our attention to the international indices. We'll start off with the Nikkei. Then we'll have a look at the Hang Seng, DAX, and the FTSE. Any other indices I like to look at? Maybe the Djiboutian index. Of course, it doesn't exist. It's just my favorite country in the world, just because of the name. And I don't think I'll ever go there, but who knows? Okay, Nikkei. Sideways. Just going sideways. There's no trend. You might be able to say there is a slight uptrend, a very slowly moving uptrend, but I would say the Nikkei at this point in time is going sideways. If you go back through time, the Nikkei got to this level back in February, so it's been going sideways for about 10 months. If you have a look at the weekly chart, you'd be able to see a bit of an uptrend here. Yeah. So the weekly chart's an uptrend. So you could say the Nikkei right now is going through consolidation phase. It's just going sideways, consolidation phase, and maybe the next uptrend will come into play within the next few months. Don't know. But at this point in time, it's going sideways. But in the longer term, we are still seeing a bit of an uptrend with the Nikkei. What about the Hang Seng? So this one, I've been all over the place over the past, we'll say, 2 months. So we had that stimulus rise, and then it fell back. It looked like it was going to bounce off the shorter-term moving average channel, but it didn't. And then continued to fall, and it has started to bounce off the longer-term moving average channel, and that's from a couple of weeks ago. So maybe this is the bounce. I'd like to see a bit of confirmation to verify the Hang Seng is bouncing off this level, and I'd like to see it get above 21,200 first of all, and then get above 23,200. But at this point in time, I think there is potential that Hang Seng is now moving into an uptrend, but we need confirmation about that. But if you do look at this over the past year, it definitely has, the sentiment in this particular area has shifted, and the trend is starting to shift as well. What about the DAX? DAX has been quite positive. It's really weird. So a lot of negative talk about the German economy, yet the DAX just keeps on going higher. So again, some people will say, you'll hear this a lot, that the economy and the stock market are not the same thing. And this is pretty good proof of that. And German economy is struggling. In fact, if you just Google Germany economy, probably struggling with political crisis in France and Germany spell more trouble for Europe's ailing economy. Symptom of Germany's faltering economy. Shrinking GDP forecast adds to German woes. Germany reinvesting itself amid a new reality. Is Germany doing well economically? Has not seen significant growth in the past 2 years, etc., etc. New York Times, why Germany's economy, once a leader in Europe, is now in crisis. So if you just have a look at the German economy, you think, well, it must be doing pretty badly. Have a look at this chart, and it's complete opposite. So something is happening in Germany to lead the market up. Not sure exactly what it is, haven't delved that deeply into it. There is something definitely going on, something a little bit different about the German stock market versus the German economy. And a really good week, in fact, for the DAX, up, up 3.86%. Maybe a question is, why is DAX doing well when German economy is crap? Why is the DAX doing so well? Strong performance in technology, financial, industrial sectors have fueled the rally despite broader economic weakness. Here's a Euro News. Germany's stock market records fresh high despite economic weakness. Here we go. With Germany in recession, why is the DAX 40 at record highs? This is in January 2024. Anyway, so again, the economy and the stock market are not the same thing. Anyway, so in fact, the DAX weekly looks pretty good. Now onto the FTSE, the UK. This is an indice that's been going sideways for a while. Still going sideways. In fact, you might say it's near the top of its trading range. Just put a line there signifying sort of the top of the trading range. It's not exactly the top, sort of like a zone. I like to think of these lines as zones, not exactly one single price point. I think of these resistance or trading ranges as zones, resistance supports as zones, but definitely the FTSE has been trading in a range since about March, and it bounced off the bottom of the range not that long ago. In fact, I think I mentioned if it fell through 8,000, that would be fairly bearish, and it just bounced. And it got very close to the top of the range during the week. And overall, the FTSE was down. It was up slightly, up 0.26% for the week. Now, if you have a look at the weekly chart, you'll notice that it is slowly moving higher, very slowly. I'm wondering if the FTSE 100 is full of oil companies, financial companies, that sort of thing. And maybe that's why, and much fewer tech companies, and maybe that's why you don't see much movement. In fact, FTSE 100 constituents. There should be something here. Here we go. London Stock Exchange, FTSE 100 constituents. I hope they do this by market cap. No, it's not by market cap. Highest to lowest. So we've got AstraZeneca, Shell, HSBC, Unilever, something called RELX, British American Tobacco, Rio Tinto, London Stock Exchange Group, BP, GSK, Diageo, Rolls-Royce, National Grid, Compass, Glencore, Barclays. Yeah, so interesting group of companies there, and not surprised to see a few oil companies there. AstraZeneca is the biggest company there, which is interesting. Unilever, HSBC, so financial, British American Tobacco. Interesting. Anyway, let's move on to commodities. Let's move on to commodities, and we'll go back to daily charts, and we'll have a look at gold first of all. And nothing much happening with gold. There's a big down day on, I think it was Monday last week. Was it Monday last week? Yeah, Monday, 25th of November. And since then, gold has been going sideways. There's nothing, no volatility in gold at all. So we could see this as, or view this as sort of a fight between the bears and the bulls, and no one's winning. So I could see gold going either way. I would say there's a greater probability that gold will actually go up from here, not down. But if I see gold fall below the previous low on the 14th of November, that would be probably the first signs that gold has lost its positive sentiment, and maybe the trend is changing. But we need to see that first. Now, gold could go higher from here, and if it gets above, first of all, above 2,720, and then if it gets to 2,800, that will be a really positive move. But at this point in time, I'm seeing not as much negativity about gold right now. It's still in an uptrend, but probably not as strong as what we've been seeing. The other thing, maybe gold's just been going, is going to go sideways for a while. That could definitely be happening with gold. So we just don't know which way gold's going to move. No one knows. So you could be an ultra bear, you could be ultra, what do you call it, gold bug, and think gold's going to go higher, but we just don't know. We're talking about the future. No one knows the future unless you have built a time machine and you've gone into the future to see. And I think the questions to ask you would be, why are you watching this video? Anyway, silver, on the other hand, now silver has bounced, or did bounce off the uptrend that's been placed since February. So that could be a good sign. And this could be just a bit of short-term weakness. So I'd like to see silver get back above $32.50, because that has been an important level for silver. So I'd like to see silver go on a rally. There has been some interesting silver plays on the ASX. We are seeing more and more silver plays, by the way. A few years ago, there was no silver companies on the ASX. Now we have quite a few. So Andean Silver, maybe, what's the other one? There's quite a few. USL, what's that one called again? USL, Unico Silver, Silver Mines, Andean Silver, Silver Mines was another one, SVL. Anyway, so I don't mind this chart, and I think this could have been a buy the dip situation. That's all I'm going to say. But I need to see silver go on a bit of a rally from here. And I think what would help there is if gold goes on a pretty good rally and breaks to all-time highs. Now onto copper. And so we've gone from gold, which I think looks pretty good. Looks okay. Silver, I'm a little bit more hopeful about. Copper, I'm neutral when it comes to copper right now. Don't see any trend. Maybe the only thing is it has looked like it's bounced off the support level at around about $4. But there's no trend in copper right now at all. So I have only one copper company, and I have thought, why am I still holding that company? Because copper itself is trendless. It's trendless right now. Okay, let's move on to iron ore. How is iron ore doing? And this is another one where I think it's mostly trendless. Nothing much is happening with iron ore. If anything, you could say and argue that it's in a downtrend, but that downtrend's pretty weak. Well away from the lows we saw back in September, and those lows were about $90, so about $100 right now, or just above $100. So I need to see the price of iron ore start to move higher from here. If we do see it's moving higher, 110, 115, that would be a really solid move. But what's the catalyst? What's the catalyst behind a move in iron ore? I'm not sure at this point in time. What's the catalyst for it falling? I don't know. So the market's unsure, maybe not unsure, but there's no catalyst for pushing iron ore higher or lower at this point in time. Uh, Uranium's identical, just nothing happening here. There's no trend, sort of going sideways, consolidating. So this is a spot physical uranium, just going sideways. You could say it's trading in a range between $23 and $28. That's probably fair enough, but short-term trading range. And yeah, I have no uranium companies right now in my portfolio, and I see no reason to hold uranium companies because I have no idea which way uranium is going to go. It could go higher from here, it could go lower. So I think this all depends on your sentiment when it comes to the underlying commodity. And I have no sentiment when it comes to any single commodity. I just don't know. The future shows if you think you do know, more than likely you're going to be wrong. Oil. Or you might be too early. Yeah, I've been too early with some of my thoughts on some commodities. Lithium, uranium. Prime examples. I thought, oh, now's the time to buy lithium and uranium. And I was too early by a few years. I think I was too early in uranium by about 3 years. Oil. This one, so it does look like it's in a downtrend, but it's not a strong thing. You can see a bit of volatility there. So right now it's at $67. If it falls below 60, was it $65? That would be really negative. So it's just above that support level. So if anything, a short-term downtrend, sort of a weak downtrend. But again, I point this out time and time again. If you have a look at the weekly chart for oil, it's just going sideways. It's been going sideways for years. Just nothing here for me to get excited. By the way, I do own one oil company, that's Karoon. I'm not sure why. What else do we have here? I could go on with the other ones, gas, lithium. Let's have a look at coal. So this is a weekly coal, and again, nothing much happening with coal. If you have a look at lithium, maybe it has reached a bottom, maybe, that's what I'm going to say. What about tin? Tin has seen a little bit of a drop, just a little bit of a drop. And if anything, it's maybe in a short-term downtrend. Nickel, if you go have a look at the weekly chart, has found a bit of a bottom maybe, but there's no reason to be excited about nickel. And what about palladium? So again, another one, looked like it was breaking out palladium a few months ago, and it's no. I do think it's reached a bottom, and I think it has a chance to rally, but again, I just have no idea. But definitely the downtrend has come to an end, and palladium was in a long-term downtrend, and I think that downtrend has come to an end. And what comes after a downtrend? Well, maybe a consolidation period, and that's what it might be doing right now. And what comes after a downtrend, then a consolidation period, or an uptrend? Not all the time, but I think the possibility of an uptrend for palladium is more likely now than it was this time last year. We'll have a look at cocoa. So let's have a look at Bitcoin. 99,969 as I speak. Not surprising that $100,000 is an important level for this company, for this particular asset. Yes, asset. And it's been oscillating above and below $100,000 for a while. Now, the Bitcoin bears got so excited on, was it Friday? When was it? Yeah, it was on, what time was this? What are you doing? Stupid trading view. So it looks like Bitcoin bears got really excited. I saw so many tweets about this. Oh, it's going to drop to $20,000 now. This is just a start. And so this was on Friday, 6th of December. So local, about 8:30 a.m. Local time. So I completely missed this. So Bitcoin dropped from $98,000 to $92,000 in a few minutes. And then it recovered back almost immediately. But there were so many tweets when this happened that this was the end of Bitcoin. The Bitcoin bears were having an absolute a wonderful day, and then they just didn't realize that this happens a lot with Bitcoin. But if you have a look at the daily chart for Bitcoin, it's hardly a blip. All you see is on this one-day candlestick, you do see the bottom getting to 92,500, but the price of Bitcoin then rallied again. So it's just people just overreacting to something that was very short term. It was obvious it was short term because you saw an immediate bounce. So some people took advantage of that very short term move and bought Bitcoin at a little bit better prices. Anyway, so $100,000 Bitcoin is sort of straddling. Is that a word? Straddling. Sit or stand with one, yeah, okay, on either side. So in a way, it is. I'm using it maybe in the wrong context, but it's oscillating below and above $100,000. You can see that just in the candlesticks, and even if you have a look at, say, maybe the 1 hour chart, you might be able to see that as well. Yeah, that's $100,000. I'll put it in as a line. I should put it in as a line. Yeah, it's been oscillating above and below it since it broke out on Thursday. Yeah, so above, below, above, now it's below, and it's trying to get above again. Actually, I put that at the wrong price. There's $100,000. And right now, as I speak, it's $99,975. And the funny thing is with Ethereum has no problems. There's no resistance level at $100,000 because it's 4,000 and just keeps on going higher. So I think a better indication of strength in crypto is actually looking at Ethereum because it has no resistance level. Maybe 4,000 is resistance level. It broke out back in about the sort of the end of November, a beautiful breakout, and just keeps on going higher. So this is a beautiful looking chart. Look at the volume as well. I talk about volume when I'm talking about ASX stocks, but look at the volume in Ethereum. This is another. Volume matters. Volume matters. This is more proof. Volume matters. Okay, let's have a look at bonds. So these are 30-year bonds, and we have seen the 30-year bonds pull back. So we have seen 30-year bonds pull back. So if you just have a look at this pullback and have a look at sort of the longer-term view, you probably could argue that there is no trend in bonds. It's just oscillating up and down like a wave. So there's actually no trend in bonds right now. And this could be just a bit of a correction, like we have seen a few times in the past year and a bit. So bonds, not that exciting right now. Now have pulled back. If bond yields kept on going up, maybe not past, but up to say 5%, that would have been concerning. And finally, we have a look at currency. Australian dollar keeps on falling. I need to see it rally. So it does not look good. I'm just going to have a look at the weekly chart for the Australian dollar. And yeah, it's actually in a downtrend, the weekly downtrend. So it does not look good. Now, during the COVID-19, the Australian dollar got down to 55 cents. Could we see it get below 60 cents would be a fairly negative move. Okay, now we get to the individual company portion of the video. Now, what I'm going to show you, first of all, are 3 companies who I'm trading right now. And there's some reasons why I bought into these 3 companies. And these are sort of like sort of the blueprint of what I'm looking for every single day. I'm looking for companies that whose sentiment and trend are shifting from negative to positive. Now, and hopefully you'll be able to see what I mean by looking at my 3 examples. So I've got Parenti, Premium, and Solvar. These are 3 examples that I have bought in recently. Okay, Parenti. And I'm just going to be looking at daily charts. So I have to go back to daily charts, not weekly. So if you look at Parenti from here, so this period, nothing to get excited at all. Now, if you go back here, you can see share price of Parenti was at a downtrend, and then it's like a V-shaped recovery. I don't like these setups. When the share price is in a downtrend, it just takes off all of a sudden. So I don't like these sort of setups where you get the V-shaped recovery. I won't trade these usually. What I'm looking for is what happened with Parenti. I'm looking for a period of time when the share price goes sideways. And Parenti share price went sideways between May and September. So we're talking about a 4-month period, which is okay. I don't mind that sort of consolidation period. I prefer longer, but that's okay. And then when the share price started to break out, you can see the share price starting to move into an uptrend in late September, early October. You can see the 2 moving average channels starting to separate from each other. That's a good sign. Share price trying to start move into an uptrend. We saw the share price of Parenti pull back in early October. That's okay. And then it started to go higher. Now, this would have been an awesome trade if I bought on this little pullback, but I did not have the confidence at that point in time. And then the share price took off. I was a little bit late. We saw the share price really take off in the middle of October. That was definitely a breakout. Not on positive financial news, I don't think, but definitely you can see a sort of a separation in the longer term, or the two moving average channels. That's a sign the share price is moving into an uptrend. There's other signs the share price is moving into an uptrend that is pretty obvious. And the share price went sideways for about 3 or 4 weeks. And I took a position in Parenti. When was that? The 18th of November, right at the end of that consolidation period. And then the share price started to go up. Now, the reason I took a position in that at that point in time, and there was a reason, the share price was very close to the shorter term moving average channel, this sort of average channel right here. And I've seen this time and time again. When the share price rallies, it moves away from the shorter term moving average channel, and then you see a consolidation period. And when the share price hits or gets very close to the shorter term moving average channel, it continues, or moves, starts to move higher. And that's exactly what we've seen in Parenti. It got very close to that shorter term moving average channel and started to go higher. So that's exactly what I hoped would happen, and that's exactly what happened. Now, don't see much increase in volume, but that's okay. So that's what I'm looking for on a daily basis. Sometimes I'm late to the party. Sometimes I get in fairly early, maybe a little bit too impatient. For example, a great case of this is Fisher & Paykel. This is not one of the examples I was going to show you, but this is a case of me getting in a little bit too early, maybe not too early. So I got in on the 22nd of March. It just moved into an uptrend. There must have released something positive on that day. So maybe I'm being a little bit unfair on myself saying I got in early. Definitely got in really early with Gentrack, 2 years early for that particular company or that particular trade. But anyway, this is actually another case where share price moved into an uptrend. I saw it doing that, and the share price has just taken off. It's gone from $24 to $33 in a fairly short period of time. Okay, on to my second example. The reason I did not include Fisher & Paykel is because it's been playing out for quite a while. I'm looking at examples that are bought in recently, and Premium is another really good example. So share price in a downtrend. And you've got another instance where the share price was in a downtrend and we saw a V-shaped recovery. I'm not looking for this. And the share price moved back into a downtrend. Share price going sideways for a while here, not much movement from November last year all the way through to August this year. So nothing much to get excited here. But when they did release their results, the share price and the market did react positively. I did take note, share price up 25% on that day. Share price then did pull back, and you can see how the two moving average channels starting to separate. So, and they started also, we saw them change colors from red to green. That's another good sign. So we had the pullback, just like we saw with Parenti, and the share price took off. We've seen two consolidation periods, sort of like a flags or pennants. So this first time was in late September, early October. And look what happened with Premium. Share price went on a nice little rally, then it went sideways. As soon as it hit the short-term moving average channel, it went on another rally. And then the share price actually did pull back, moved into the short-term moving average channel. Look what's happened since then. It's just taken off. So I did buy on this literal consolidation period at 65 cents, and the share price is now 78. So this is another good example of, it does look like sentiment and the trend have shifted from negative to positive. And this is what I'm looking for every single day. Now, not all these sort of trades pay off, but they do work a fair bit. And the other one is Solver. So someone actually mentioned that this chart did not look good. Yeah. Someone said, oh, the chart looks good. And then someone else replied, it doesn't look good. So you get different opinions. So that's the great thing about technical analysis. You can get different opinions. It all depends what you're looking at. So Solvar share price has been a long-term downtrend. No interest in this at all since, well, you can see the share price was in a beautiful uptrend from 2020 into 2022. And then the share price rolled over. And if I was trading this, I probably would have sold at probably sometime in early 2022. It was losing its trend, and then it moved into a downtrend. So it definitely would have sold out by March 2022, moved into a downtrend, and there was no reason to get excited about this company at all until probably around about just around the time I bought. I might have been a little bit too early, and I should have waited for a pullback. So there was a nice little pullback just after. Oh, no. The reason there was a pullback is because they went ex-dividend. That's why there was a pullback just after I bought. I actually did not actually realize that. So if you actually do a adjusting for dividends, this should adjust. Yeah, so you can see the share price where I bought is now higher. It's not actually touching any of the candlesticks. That's because this particular chart has adjusted for dividends. So if I adjust back, there's me buying, maybe without even knowing they went next dividend the next day. Anyway, so I took that profit, took that dividend and went, oh, that's okay. I expect a pullback, and the share price moved to the short-term moving average channel and took off. I can see it going sideways for a long period of time here, and I was wondering, it's not really doing anything. I'll just give it a bit of time. And then all of a sudden, a couple of weeks ago, share price has just taken off. So it's gone from $1.30 all the way up to $1.55. I don't think there's any reason, but again, this is another sort of chart I'm looking for. Downtrend, don't really see a really significant sideways period, but that's okay. But definitely a shift in trend and a change in sentiment. It's gone from negative to positive. So this is what I'm looking for. So now I'm going to show you some examples of companies I am not trading at all who are showing signs of these. Just showing signs. Now, some of these won't develop further, and I'll throw these out. So I do watch these companies, or will be watching these companies every single day, just to see if I see something else to like. Okay, so let's have a look. Now, quite a few of these companies I would classify as low quality, but that's okay. First one is EVT. Okay, so this has been a downtrend for a while. It looked promising a few times in the past, but it's been in a downtrend, so I haven't really been paying attention. But recently, it broke out of that downtrend. I think it was about 2 weeks ago. It broke out of the downtrend, and we have seen the share price pull back, and we can see the shorter-term moving average channel starting to go higher. So if I see the share price continue to rally from here, that would be a really good sign. So I'm definitely not there yet with this one. I need to see further proof. This could be just a short-term rally, and the share price could fall. This could be a false breakout. Share price could fall from here. But if I see the share price go a little bit higher, this could be a nice, interesting trade. I'm not the biggest fan of the company itself. Definitely not a high-quality company, but I'm seeing some signs when it comes to this company that this could be possibly a trade. So probably less conviction in this one than I am in some of the other charts I'm going to show you. The next one is Betmakers. Now, I could show you Betmakers, Bluebet, maybe even PointsBet. They're all showing very similar things. Now, this one is Betmakers, a little bit different company than Bluebet and PointsBet. This one provides technology, I think, to betmakers, betting agencies or whatever. It showed the first signs of the end of the downtrend back in April, May. You can see the share price wanting to rally, but that was not successful. That potential breakout was not successful. There was still too much negative sentiment in the company, and the share price continued to go sideways. A beautiful consolidation period. So if we didn't see that little rally in the share price, this would have been one of the best consolidation periods we've seen for a while. It would have been a 1-year consolidation period. So share price going sideways. And then over the past month and a bit, we've started to see a little bit of excitement come into the company. And we haven't seen a separation of the moving averages, but I think there is potential we will see that. The short-term moving average channel has gone green. The longer-term moving average channel is starting to go higher. And there is a chance that if we start to see the share price go higher for Betmakers, we might see that separation. At this point in time, just might. I probably would like to see some higher volume coming in, but this is showing some signs of a shift in trend and sentiment. The beginning of the story for this one, but definitely showing some signs. So I think it all depends on your risk profile. If you're more willing to take a risk with this one, it might be okay to get in early. I'm not there yet with Betmakers. Interesting one here, Telstra. Yes, Telstra. So this one is interesting. So I have no interest usually in trading Telstra. So there has been periods where the share price has been in uptrends. You can see that in 2021, beautiful uptrend there. But I would not be holding this company for the long term. Now, the reason I've included this company now is because it is showing a bit of signs, particularly if the share price goes or gets above $4.05. Definitely you'll see the signs of an uptrend. You have the separation of the two moving average channels, share price at a long-term high at that point in time. And yeah, this has the potential of moving into an uptrend. Now, again, I would classify Telstra as a low-quality company. And you might be saying, what? Yes, I would classify this company as a low quality. The reason I say that is if you have a look at the monthly chart, You see the telltale signs of a low-quality company. This is not the signs of a high-quality company. This is the signs of a low-quality company going all the way back to when they listed in 1998. If this was a high-quality company, the share price should be going from the bottom left to the top right. That's the signs of a high-quality company. So not a high-quality company. There's a few reasons behind that. I don't think they have growth in, I think even their dividend has gone backwards. So revenue's gone backwards, dividends have gone backwards. That's not a high-quality company. Just because they have a lot of revenue doesn't mean it's high quality. Anyway, so this has potential. I'm going to say that again. This has potential, but I'm not there just yet. And I may never be there with Telstra. PeopleIn, I'm a little bit excited about this one. I think this is showing signs of the share price moving into consolidation phase. Longer term downtrend. I have traded this before. I traded this in December last year, so about a year ago. Share price rallied off $1, and I made sure I sold pretty quickly. But we're starting to see signs of this company moving into a consolidation phase, at least, maybe even moving into an uptrend. We saw the share price rally towards the end of November into start of December. Share price went from about 80 cents up to almost $1. But don't forget, $1 is a very important level for this company. It took a long time to fall below $1, and a lot of times it rallied off $1. And then when it fell below $1, it tried to get above $1 and fell away. So it went from being support to resistance. So we have seen the share price hit or get very close to $1 on the 3rd of December. Share price got to 98 cents, and then we have seen the share price fall away. Not a lot, but just fall away. And this could be an interesting trade. So this is probably one of the charts I'm looking at a little bit more closely, but I think there could be definite possibility where it just consolidates, goes sideways for a longer period of time. So probably not there just yet, but I am intrigued by this particular chart. Baby Bunting. So the next two companies are retail companies. Baby Bunting. Oh. So long downtrend. No, there's been once I was a little bit interested, and that was back in March, but I didn't get quite there. I thought, oh, it's starting to look interesting, but not quite there. This is a little bit more interesting. We have seen the short-term and the longer-term moving average channels separate. And also, the longer-term moving average channel is changing colors from red to green, which is telling me the trend and the sentiment is also changing. I use that as a bit of a proxy. So it looks like both moving average channels are going green. And the one thing I'd like to see is the share price starting to go a little bit higher from here. Definitely above $2. That would be the next price I'd like to see the share price get above. So this has the signs of a bit of a turnaround, but just like other companies in this list, I'm just not there just yet, but it's getting close. Getting close, Baby Bunting. The one thing I'd like to see is some bigger volume coming in as well. Very low volume. So that's one concern I do have, very low volume. Michael Hill Jewelers, I don't think it's called that anymore. It's called Michael Hill International. So this is, I'm probably a little bit further away from liking this one. And the main reason is the share price is still in a long-term downtrend. And the reason I say that is this red moving average channel, the longer-term moving average channel is still, it's still a long way from that, from changing from red to green, just because the share price has dropped a lot and it's fallen away fairly quickly. But I think maybe the bottom has been reached. Maybe. Our share price going sideways for the past month, so that's okay. Because again, if it goes sideways for a long period of time, that means more and more likely shareholders in the company are getting bored and they're selling. And the more of those shareholders who sell out, the more likely when the share price breaks out, it's going to be a really good breakout. But I think this can move into a shorter term uptrend. If we see the share price get above 62 cents, that would be a very positive move for Michael Hill International. So this is starting to show the signs of the trend shifting. Maybe sentiment is slightly negative, particularly longer term sentiment, but even then, shorter term sentiment is starting to shift for Michael Hill International. So definitely one, this is definitely a chart I've just put onto my watch list because I'm seeing signs, the first signs of a shift. Okay, the next one is a company I know nothing about, QPM Energy. This is a little bit different. I know nothing about this company. So there are a lot of things to like about this chart. Long-term downtrend. we're starting to see definitely a shift in trend. I think that's without doubt. Really good move on Friday, share price up 12.8% on really good volume. So another thing I like to see here, another thing I like here is increase in volume over the past year. So we started to see the volume increase and the share price get very close to its low, and we saw continued good volume in a consolidation phase. And then in the last few weeks, we have seen the volume pick up again as the share price has moved and is trying to move into an uptrend. So this is definitely the first signs of a trend of a share price moving into an uptrend from a long-term downtrend. So QPM Energy, don't know anything about the company. In fact, markup is 133 million. I'm going to see if they have any apparently they had $44 million of revenue in the past year, past half year. If that is real and this company has moved into production, this could be an interesting trade. So I don't know anything about QPM Energy except the chart looks really good. Well, maybe not really good. It's looking really interesting. Incitec Pivot. So this definitely has its signs of maybe the trend starting to turn into an uptrend, starting to turn upwards. Now they went ex-dividend not that long ago, a few weeks ago, and the share price needs to get above $3.20. It just needs to get above that level. So this one has first sort of been, we've seen signs of the trend shifting over the past, say, 3 or 4 months, and I need a little bit more confirmation when it comes to this company. The other thing it is hard sometimes to ignore your biases, and I definitely have negative bias against Incitec Pivot. I just think this is a really low quality company, but the chart is looking interesting. So I'm willing to trade this if I can just ignore my biases. Straker. So this is not Star Trek. What's his name? Straker? Striker? Straker, Star Trek? Not him. No, that's not him. Definitely not the one I was speaking of. But I'll take it. There is someone called Straker in... No, it's not in Star Trek. Straker, Star Trek. Star Trek, what was it called? New Generation? Is that the one with Patrick Stewart? Which is the one with Patrick Stewart? Jonathan Frakes. Who did he play? Riker. That's what I'm thinking of, Riker. Okay, so totally different than Straker. Riker. Anyway, Straker Limited. I believe this is a company, has something to do with language or translation or something like that. Language and subscription services. Okay, so long-term downtrend, no interest. No interest in this company at all since 2021. At that point in time, share price was above $2. Share price has fallen from above $2 all the way down to 37 cents. Something's happened. Something has happened with this company over the past few weeks. I have a feeling the company did release a positive trading update, if I remember correctly, or they released results. Financial outlook on the 14th of November, and then they released results on the 27th of November. And it does look like this movement has coincided with that, or very close to coinciding with that. So definitely we have seen a bit of an increase in excitement in the market. And you can definitely see that in the volume, increase in volume over the past month. And the share price has taken off. Now, I'm not sure if I like how quickly the share price has taken off, but if we see the share price go sideways from here, that could be a good sign moving forward that this is sort of a real movement, that there's some strength to this move in Straker. So I'm not there just yet with this company, but this definitely has potential. So Straker. I have a feeling the company is now profitable or has been profitable, but definitely, if I remember, I could be completely wrong, but and I shouldn't be looking at financials. This is just technicals, but I think maybe that's one of the reasons why the market has become interested in this company. Now, Credit Clear has shown these signs of a shift in sentiment and trend for a while now. Share price went sideways for a long time after a breakout, back in February, went sideways for many, many months. And then look at the share price after then. Look at the volume. Look at these spikes in volume. That's a good sign. So Credit Clear is, or chart has been looking good for a while. So this one is a bit more of a longer term shift, but I do like this chart for Credit Clear. And even though I like it, I'm not trading it. There's a lot of opportunities in the market when it comes to trades. You don't have to trade. You don't have to be, you can be picky. Yeah, you can be picky looking for trades. Okay, NobleOak. This is definitely one I'm paying really close attention to. So share price in a downtrend, recent listing, 2021, if you consider 2021 a recent. Life insurance, I'm pretty sure they sell. And downtrend, downtrend, downtrend. We're starting to see the shorter term trend changing from sort of negative to positive, maybe suggesting sentiment is starting to shift. Someone didn't mention this company, Auswide Bank. That's another good sign. The first sign the market is becoming aware of this company. I just need to see the share price get above $1.68. But this is showing some signs of a shift in sentiment and trend. But I need further confirmation. So that's NobleOak. Aroa Biosurgery. This is another one. In fact, I like this one quite a bit. Share price in the downtrend for the last few years. In fact, we'll say 18 months. Down she goes. And we have started to see definite signs of a shift in trend. Share price moving into an uptrend, broke out of the previous high. I do like this chart. Probably the one thing, maybe negative, I could find is I'd like to see some higher volume coming through, but I do like this chart for Aroa Biosurgery. And finally, we have a bank, Auswide Bank. Are you willing to buy some shares in this particular company? Is there a takeover bid? I have a feeling, or maybe a merger. Or maybe that's with MyState. Oh, it is. It's MyState and ABI as well. Yes. Okay. So there is a takeover bid for this company. Okay. So you don't really see it here, although. Now, this is another chart I quite like. I think this is really promising. Now, first thing, have a look at the volume. This goes back to July 2023. Very low volume. Starting to see the volume pick up. And definitely, over the past 4 or 5 months, we have seen an increase in volume. And that coincides with the trend starting to shift. First signs of the trend shifting. Share price, if it gets to 460, we're talking about almost a 1-year high in the share price. This is a bank. So all the other banks have been running. This one has not been running, not literally running, but going higher. So maybe this is a very low quality bank and it has a lot of catching up to do. I don't know. This one does look interesting. Okay, so that's all I have for this particular, what do you call it? Technical update. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.